Good morning, everybody. Today is on the 9th of May. The 9th of May is the Friday. Um, Yesterday we had great moves on the dollar, on the gold, sorry. We were looking for buys on this other side. We are looking for buys the day previous, we were looking for buys above that 396. We only got this push up and then the market came back down. So yesterday we were looking at these sells and we got the sells from this point all the way down to this point, right? So the sells were very good yesterday. This was the entry over here, pushing all the way down to this point. All right. Again, the market did do the same thing. There's some consolidation, pull up, and then an impulse move again, went all the way down. And that's really good, actually. So congratulations to everybody that took that trade. Today, in terms of fundamental, what we have is unemployment change, and unemployment rate on the Canadian dollar. We have the Governor Bailey will be speaking today on behalf of the GBP on the USD. It's nothing much. It's just some low impact and medium impact from members of the FOMC doing a quick speech. So that's not really gonna be a problem as such. Yeah, and they're gonna continue to speak all the way through Saturday. And yeah. All right. So next week on Tuesday, that's when we have the CPI. All right. We're gonna be doing this live again, the CPI. So yeah, you know the drill. All right, let's do a quick analysis on the same gold transaction based on market structure. We're gonna lose support and resistance to identify the breakouts. So we're gonna be trading the breakouts. Right. Highs and them lows over here. So still gonna use their monthly high and previous monthly candle high, previous monthly candle low, to identify the highest since no other candle has broken that point. Then we have a weekly low over here. It's a weekly low right over there. When you come to daily, we identify these as the daily high. All right. When you go down to 4 hours, 4 hours, how are we seeing this? We identify these as the 4 hour low over here. 1 hour, gonna be identifying these as the high over here. Yep, this was the high though. It just got broken over here. This was the high. Let me mark this for you. This is what we've been looking at, and the market just broke above. So honestly, I'm all good. I'm all good with this. Yep. Yep, that is how the market looks like on that side, which is pretty brilliant actually. Honestly, this one is gonna be a good one. I'm just thinking out like that, you know. Something like this. So what I want to do is I want this candle to flip above, break this candle. It's break its wick. I want this candle to tap over here, flip back, and continue pushing up. And at that point, I'm gonna do an impulse entry at that point. Just like that. Just like that, I'm gonna do an impulse entry. I've seen this happen too many times, so yeah, it's gonna go. I've seen this happen. If this kind of flips, all right? It's still dependent on if the kind of flips. If it doesn't flip, then it could even push down. All right. So again, we don't just enter into the market blindly. What we do is, potential sells. Don't enter now. Don't enter now, please. If you really love your money, it's not the moment to enter. I know some of you usually hear me say, we are waiting for this to break, and then we enter, and then you enter the trade hoping that, oh, since niggas said we are waiting for this to break, why don't we just proceed and get in earlier? No. And then you end up losing. there's something we call trading discipline. Very important. You gotta need to see the checklists. You need to get a trade where you can explain to someone later, like, this is why I took this trade because it broke here. Because you don't, and the only way you can do that is after you wait for it to actually do that. Yeah. Don't chase it. Let it come to you. Like you see, what I'm doing right now, I'm looking at areas where I can let the market come, and then when it gets there, I can enter. If it doesn't get there, then I'm not gonna enter. And that's it. It doesn't matter if I don't have to trade every day. I mean, if there's no trade for today, I just leave it. The market is always there. I know I'll get something eventually. So yeah. So don't try to end at this point telling yourself that, you know what, it's good. The moment it starts going up, you're going to be having a great move. No, I don't think it's a wise idea. What if it refuses to go and goes to your stop loss? Right? So this is what I'm gonna be like looking at myself. I want to see this candle, or even if this one closes like this, if the next candle breaks this high, then well and good. I'm gonna pick a buy to go up. If it doesn't, then that means it's gonna bring us back into this zone, and this is a no trade range for me. This is a no trade range. Yeah, I'm just gonna leave it there at that point and wait for a break probably down here. If we get it, if we don't get it, it's a Friday. I wait for Monday. All right. Have a good one. Risk manage your trades very well. Guys, trade what you see, not what you think. Okay. Please don't lose every profit that you've made this whole week because you want to chase today's bucket. All right, guys. Take care and have a good one. Bye bye, everybody. Bye bye.